Now, despite the recovery in share prices globally and in South Africa following the sharp sell-off in March when COVID-19 hit, it is evident that significant downside risk remains due to muted consumer demand, distressed companies, and consensus of a global recession amidst no clear timeline for a return to normal. Market risks are also evidenced by necessary and unprecedented fiscal and monetary stimulus interventions domestically and around the world. Now, this is the word from Benedict Mongalo, the Chief Investment Officer at independent fund manager Novare Investments. Thank you very much for joining us, Benedict. You've been looking closely into this research here. As you may have heard earlier in the show, we're talking about how shares are rallying, signs of recovery, etc. But you think that maybe not just yet a while.
Good evening, Chris. Absolutely. I think from our perspective, I think we'll approach sort of this bull rally over the past few days, very cautiously. I think essentially at the beginning of 2020, we had some concerns, and those concerns revolved around the trade wars between US and China. There was concern around the economic slowdown globally. And in the South African side, we were obviously concerned about the fiscal position of the sovereign. We were concerned about the credit rating downgrades. And those risks, they remain up to this day. If anything, I suppose, the virus have sort of rapidly introduced the general consensus of a global recession, which is, I suppose, at this point in time, seems to be the general consensus. So whilst I think the market has been rallying, we are deeply concerned that it may just not be the bottom, given the fact that the sentiment that we are seeing is not matching the fundamentals at this point.
A lot of people are complaining. Some people have lost 20-30% of their investment portfolios. We have spoken to others in this program in recent weeks saying, oh, well, wait a bit, you're going to get your money back. But is it quite that simple from what you're saying in this research you've done?
Yeah, look, I think from our viewpoint is that, the market will recover. But I suppose the question is, when would we see this recovery? And as I've said, have we seen, the bottom of it? And our view is that given all of the factors that I've mentioned that we remain concerned about, we probably have not, have not really escaped, the complete bottom of the market. And I suppose the question is, we see a whole lot of people asking the question of whether, are we having, a V recovery or is it a U recovery? I think it's very difficult to call it, but what we could see is certainly that the fundamentals just do not match what, the sentiment is at, at this point in time. I mean, for me, the simple example would be that given that, we are concerned about consumer demand, we don't know when things are going to return, to normality. Why is it that, we are seeing an overall rally across the board, which seems to suggest that, things are getting back, to pre-COVID-19 levels. But on the other hand, it may also be saying that, initially there was a huge panic, a knee-jerk reaction, and a whole lot of people were trying to get out of the market. But whatever the reason, I think we are just approaching this rally very cautiously.
But still, the projections for the economy here in South Africa, that millions of jobs will be lost and more than half of the country's companies are likely to go to the wall. I mean, and surely that means some of those companies will be listed companies, and there's likely to be a lot less activity on the JSE as well.
Absolutely, Chris. I think if we just think about that, and we look into all of the news that we are hearing, almost on a daily basis, companies getting into negotiations to lay off, employees as companies filing for, business rescue, and you look into the economic prospects, depending on which economist you are listening to, other are forecasting, a double-digit negative growth. So there is reasons to, to be concerned. I think it's good that we are seeing, this market rally, but absolutely, we have got every reason to be concerned, given all of the fundamentals that would ordinarily, look at. The other factor to note is that, I suppose there hasn't been sufficient data to suggest, a recovery, even in in markets that you would argue that you must never bet against, the U.S. economy. The only thing that we have kind of seen there is, the unemployment figures improving. I think in the Chinese market we've seen, the passenger car sales also pointing to some recovery. But I suppose it's not difficult to make a forecast when you know that most of the people remain confined, to their houses. So you could almost see that consumer demand will be muted.